Let me introduce the presentation. What are we going to do today? Firstly, I will mention some of the biggest red flags, some of the scams that you should be aware of while trying to invest in crypto or recommend it to somebody. Then I will continue with fundamental analysis, which is the way, it's the procedure, how you can recognize a good coin and how can you tell a good coin from a bad one. Uh, and in the end of my presentation, I will give you examples. Apart from teaching the course cryptocurrencies, which is right before this one, some of you might be also enrolled in the course, and I'm happy that you follow this presentation right now. So apart from being a teacher, I also own a company, cryptocurrency consultancy company called Altlift. And with my team, we specialize for the fundamental analysis. So this is what we do for a living. Now, uh, if you want to say something, I would recommend you to either write something into the chat. You can ask questions anytime, even though there will be two slots devoted for the questions. Or you can turn on your mic, say something, but then I would ask you gladly to turn it off again in order for the others to have a better sound. First typical scheme is a pump and dump scheme. What does it mean? There are thousands of cryptocurrencies, at least. It is very easy to make one. You know that we have created our own cryptocurrency called activity points for you. So everyone can do that. It's easy. And a pump and dump scheme is a trick that you push the price of a cryptocurrency high by buying it from yourself, for instance, for an unreasonable price, and that attracts other people that feel greedy. They have this FOMO, fear of missing out, and they are afraid that they would lose their chance to get rich. And there are scammers, for instance, at Telegram Messenger or Telegram channels that so-called experts recommend you to invest in some coins, and in fact they are pumping the price and only to dump it in the end and to take the profits. So this is quite dangerous because these scammers can always say, "Oh, we were right when we recommended you to invest in the coin. Didn't you see how it skyrocketed? It went up so much." But then you were not fast enough to pull it off. So uh, your fault. Yeah. There's a joke about cryptocurrency, investing into cryptocurrency, that it is like unprotected sex. It's fun, but you need to know when to pull it off on time. So pump and dump schemes. You should not invest in coins that pumped a lot. Coins you've never heard of, and then they appear to be in the top 20, top 10 coin market cap. There is not enough liquidity. The cryptocurrency markets are quite small, and it's not that difficult to manipulate the price. So it goes up very quickly. So don't get tricked by that. How can you recognize a scummy coin? There are some rule of thumbs, some good ideas. So firstly, if you don't know at least 10 altcoins quite well, or if you are a newbie in crypto, or especially when somebody wants you to invest in a rather unknown coin and they tell you this will become the new Bitcoin, you should not miss your chance. Uh, these are typical red flags. Don't invest in these coins that nobody really knows. If you are not an expert yourself, or at least experienced investor, and you should be experienced after finishing this class with Lupo, you should buy Bitcoin, nothing else. It's a good thing to recommend to others to invest into crypto, but if they do not know what they're doing, they should buy Bitcoin. Yeah, nothing else. Maybe some top 10 coins, but I would recommend just Bitcoin. Examples: BitConnect. BitConnect was a big scam in 2017. 2017 was the year when all the prices surged, especially the price of Bitcoin, but also NAM and XRP. They went up like 300 times, 30,000%. That was incredible. What was it about? It was an investment lending platform, and it was one of the best performing cryptocurrencies. It got into top 10 back then, when the total market cap of cryptocurrencies were like triple of what it is today, maybe even more. And it was a multi-level marketing scheme. It was an affiliate. So you had affiliate marketeers who recruited new investors, like multi-levels work. They had great marketing strategy, and they did these shows like these scammy shows where people sell vacuum cleaners, pots for retired people, something like that, with this guy shouting "Bitconnect" and stuff. So it was really crazy. I was speaking about this scam on Czech national telly, and I told everyone, "Hey, this is a scheme. It is collapsing, and it will have zero value in a fortnight." And yes, in 2 weeks, it had zero values. The people standing on top of the pyramid just pulled off their money, and then this whole scheme crashed. There was another red flag with that. They guaranteed earnings for the investors up to 40% total return per month. Guaranteed. You cannot guarantee anything like that. If somebody guarantees you any profits in crypto, it's a scam. Yeah, many warned it was a Ponzi scheme. Ponzi scheme, just another word for a pyramid scheme. When the project does not repay the investors from the earnings that the product does, but from the money that the new investors put into it, it is unsustainable. Ponzi scheme is a criminal felony, even in cryptocurrency that is not that regulated. Yeah, how could it have been so popular? There was this strong appeal on conferences, and there were a lot of personal meetings for promoting of the token. The problem with Ponzi schemes and all the schemes in cryptocurrencies is that they have better marketing than good coins because they concentrate on it. Multi-levels work because they know how to sell. They know how to approach people. Like the most famous scam was OneCoin. They didn't sell coins. They didn't even have a blockchain. They just used words like blockchain and coins and stuff, but what they were selling were overpriced educational packages, and they plagiarized other sources. They didn't even have their own content. If you wanted to convert back to euros, you had to use an internal transfer system that didn't seem to work well. In January 2018, Bulgarian police raided OneCoin's offices because it was a Bulgarian project. And people were investigated. Some went to jail. Yeah, and it was a very, very primitive scheme. Once I was recommended to OneCoin by an elderly, like 80-year-old guys in a church in Battersea in London. So when person who cannot even use a computer or a fucking smartphone recommends you a coin, it shouts scam. Yeah. And this is very vicious because this is their target group. People who are, let's say, underprivileged, weak, retired. So this was really a cruel scam. Dustcoin, something similar, but way more, let's say, intelligent. The people who were running Dustcoin, they knew quite a lot about cryptocurrency, and their conferences have better, let's say, they were way more sophisticated, but in the end of the day, it ended just like BitConnect or OneCoin. They were able to attract a lot of investors without delivering a good product that would do anything. Yeah. There are also schemes without their own token, like Plus Token. Plus Token was a huge Ponzi scheme for crypto, and it was masked like an investment program with a high yield, with a lot of with a big revenue. And there were huge bonuses for recommending other member that would join their friends, their family. It was another multi-level Ponzi scheme. You get paid if you bring more people to join the scheme. There were four layers of investors, and they were layered based on how much they invested and how many sheep they brought. So uh, the platform ended up in 2019, and the scammers left the situation. They stole like $3 billion in cryptocurrencies like Bitcoin, Ethereum, and EOS, and they left the message behind themselves in the blockchain saying, "Sorry, we have run." Plus Token had most of their customers in South Korea and in China. And they kept this illusion that there is something going on by pretending that the money that they raised is used for developing some products related to cryptocurrencies, like Plus Token wallet or exchange. And because a lot of bitcoins were stolen and laundered and put into markets, mostly OTC, but also to exchanges, this excessive supply of bitcoins they needed to be sold pushed the price down, and also it harmed the reputation of cryptocurrency, which is quite dangerous. Plus token even pushed the price of Bitcoin down 2 weeks ago from now, uh, right before the huge crisis in Europe started, and all the stocks S&P went down and crypto went down. So crypto went down 2 days before that already because of another round of selling of Plus token. These scammers usually wait for the price to go up quite a lot. So when Bitcoin was for more than $10,000, they started selling it and dumping. There are also some Czech projects working similarly. Like there was a suspicious, rather scammy project called Arbolet, for instance, which was a Czech project, but they had their headquarters in Panama, and they were promising 10% revenue yearly, annually. Apparently, because they are able to trade better than the others, so they can guarantee you 10% profit at least. If that is a red flag already. If they were able to trade that well, that they are able to guarantee with 100% chance that they will win the money, why would they need other people's money? It would make no sense. It is expensive to raise money from investors and then give them 10%. If they were able to make the profits more than 10%, they would just get a credit from a bank for 3%. Yes, but they were not able to sell their strategy to the bank, obviously, because it was scam. They were just hoping that the prices will go up as they did in 2017, and if not, well, they just need to close to shut down the store. Yeah, they are trying to repay at least somehow their clients, but still, Glosson, another Czech project where the client buys hardware for mining, and legally the client should own it. And also, a registered client of a platform can choose from a selection of new products, new tokens, ICOs that they distribute somehow. But again, it is quite tricky. Firstly, they also promise like 10% annual returns. It's the same like with the Arbola. If that was legitimate, they would got an investment from a big investor or from a bank or something. Yes, so you just cannot guarantee anything like that. Also, the people behind Glossin were criminally persecuted. Like three of them at least were criminally persecuted. So it is a shady project, a Czech one, again with headquarters in Manchester, UK. When I checked their webpage half a year ago, they were not even able to write Manchester. They didn't know how to spell it. They were like MEN Chester. So it is quite tricky. There are a lot of people. There are a lot of people joined in that multi-level scheme, which keeps working, and maybe it delivers somehow, but I would recommend everyone to be very, very cautious before giving their money and their private keys to the third party. ICOs, this is a topic for itself. It means initial coin offering, like initial price offering is the moment at a regulated exchange when new stock, new shares are introduced to the market and you can start investing into a new company. ICO is the same, but way less regulated, and it is about cryptocurrencies. But in an exchange where you buy stock, you buy shares in a company, and can vote in the company. You have right for percentage of the revenue, the so-called dividends. But with the ICO, you only buy a token, and most of the tokens don't do anything. So it's very tricky. People feel like it's like buying stock, but it's not. You are buying a token, and you need to be sure that you understand what the token does, because in many cases it just doesn't do anything. Examples of the ICOs. Like now, I would like to join you. If I want you to join. If you take a look at this presentation, the PIN portal, how do you feel about it?
It's like random stock photos merged into one with a bad Photoshop.
Yeah, firstly, the quality of the Photoshop is ridiculous. It is sad. It looks like an insurance scam. Come on, it's clearly a Vietnamese project, but there is a picture from London with white people with their thumbs up. Sharing is caring, like it plays on your emotions. There is no real information. It's just like emotional stuff. So this grabbed headlines in April 2018. There were two ICOs. The other one was called IFAN that worked together, operating from Vietnam, and they swindled like 32,000 clients, and then they stole more than $500 million from them. There were again multi-level marketing scams. IFAN was advertised as a social media platform for celebrities to promote their content for fans. But what's the token for? The PIN coin was again promising 40% monthly returns. Monthly returns, 40% for investments made. Yeah. The project claimed to be building an online platform on ad network, auction, investment portal, peer-to-peer marketplace, built on the blockchain technology, using the buzzword again, blockchain technology. It's not a magical technology. It's just an accounting ledger. Come on. Giza, this is incredible. They have a pyramid scheme with a pyramid as their logo. They call it Giza, like the city in Egypt where the pyramids are. They used a fake LinkedIn profile on the name Marco Fike. They were just shouting, this is a fake. But still, they had more than 1,000 investors. And this is the cherry on the top of everything. Ethereum useless token with a middle finger in their logo. And this was the text. The world's first 100% honest Ethereum ICO. You're going to give some random person on the internet money and they're going to take it and go buy stuff with it. Probably electronics, to be honest, maybe even a big screen television. Seriously, don't buy these tokens. These were their official statement, and still they were able to raise like $1 million because on the verge of the fever, the buying ICO fever in 2017, people were just buying everything, every ICO. They were pouring money into it without even reading anything. This honest scam earned $1 million from idiots. I can't even believe what people would have sent money to this guy. Summary: how to recognize a scam. They guarantee you profits. You cannot guarantee profits on a volatile market like cryptocurrencies. You just cannot do that. There is unclear ownership structure. There are many scam projects without specifying who are the people behind it. They don't have reputation. They have fake LinkedIn profiles. They have headquarters in suspicious places outside Europe or the United States. Um, they always appeal on greed or FOMO. Hey, you are going to miss something. Yeah. You missed the Bitcoin when it went up in 2013 or 17. Now there is another chance for you, but you should not miss it. Well, if there is something like that, it is a scam. 100% sure. 99% sure. Multi-level marketing. If there is something like that, 99% sure, it can be that it is a scam. Not 100%. Multi-level marketing can work. There are companies that have product, but you need to be super cautious. Super cautious. Also, you don't own your private keys. You buy educational packages or some other shit. So it is a scam. Question to this: do you want to ask anything about the scams? If not, I would continue with the fundamental analysis. At the moment, I will check the chat. What you wrote here. Mats asked whether it is legal, whether there are any regulations from the government. Well, Ponzi schemes are illegal, even in crypto. Some other things that are illegal in traditional financial markets are legal in crypto, like insider trading. If you use insider information, you are perfectly safe in crypto if you are investing. If you do the same thing with stock, you would go to jail. You remember the movie Wolf of Wall Street? That's what happened to the guy. He was prosecuted for insider information. In crypto, it is completely legal. Wash trading is legal. Ghost trading is legal. Walls and stuff. Other tricks that you do at the exchange are legal. So, yeah, Lubosh also provided some additional information to that. Thank you. Good. Any other questions? Would it make sense to go short immediately after ICO of such a scam token? Well, I would not recommend to short on crypto because, again, the timing is super important, and most of the scams won't even enter the market. So it's like playing with the fire. You can do that. It's not very moral. It's not very ethical. You can do that, but it's always risky to short everything, including Bitcoin. So I've been trading cryptocurrency since 2013, and I'm still very cautious with shorting. I'm doing it sometimes, but rather as a way how to protect my investment in crypto, and I never use leverage. I never use margin. Let's continue. Fundamental analysis. Here in the other part, I will speak about types of analysis, then I will explain why you should do it. I will mention some types of cryptocurrencies and indicators that you should follow, and I will present you with our strategy. After that, there will be a third part, which will be making you familiar with some particular coins. So there are three types of analysis. There is fundamental analysis, technical, and sentimental analysis. Technical analysis is playing with the graphs. Yeah, you are trying to predict the future from some patterns. It is not really reliable, and it increases risk in an already very risky market. You need to understand that investing into cryptocurrency is like the most risky investment. On the scale 1 to 7, the risk is 7. It's like stock, but even more risky. This is my favorite picture explaining how technical analysis works. I'm not trying to ridicule it. We also use technical analysis for timing of the trades, but we rather base all the trades on fundament rather than technical analysis because it is risky. It only works because people believe that it will work. So there is some kind of herd behavior that it's a self-fulfilling prophecy, hyper reality. But there are big whales in cryptocurrency markets, people who have a lot of crypto, a lot of tokens, and they can manipulate the price very easily. And when they use technical analysis and they know what the herd of the investors would do, they would just do the opposite to make money and to skim them. Sentimental analysis, it's not about the graphs, it is about the feeling of the market. So you can study Twitter and the contextual words. It is good. We also use it for timing of the trades, but it is rather short term because the mood among people is very volatile. It changes like weather in the spring, so it's very short term, and it describes the market as a whole rather than individual currencies. They are all correlated. So when there is a bad mood or bad feelings about Bitcoin, it will affect all the altcoins. Also, when there is a big altcoin and there's a problem with it, significant one, it will affect Bitcoin too. Not that much, but still. Yeah. Fundamental analysis examines the particular coins and the usefulness of the project and the token in particular. Because you need to understand that blockchain is not a panacea. Distributed technology does not offer solution for every problem in the universe. It only solves some of these. There is a limited number of problems that you can solve using a blockchain. Like lack of trust among parties would be a typical one. The fact that you can solve a problem using a blockchain doesn't mean that the token is good. You are not buying a share in a company. You are buying a token. And you need to make the fundamental analysis to understand whether there will be demand for the token. And the demand, by saying demand, I mean demand that is driven by usefulness, not by speculation, not by trying to find a greater fool to whom you send the token in the future. Investing in cryptocurrencies today is like investing into technology or the startup. It's something that will prove itself in the future rather than today. Because today the real utility is not that big, to be honest. Yeah, everyone talks about cryptocurrencies, everyone talks about blockchain. Every company says, well, we are testing blockchain solutions because this is the way of the future and we are very modern, living in the 21st century, but it's bullshit. They don't really use it. Most of the companies don't really use it for anything important. So it's the way of the future. And what we are doing in Altlift is what we are trying to do in Altlift is find the cryptocurrencies that will exist in 2 years or in 1 year, 3 years. Nobody really knows. But we are waiting for the moment where people buy cryptocurrencies because they want to use the tokens without necessarily having to understand that they are using any type of blockchain technology or cryptocurrencies. No, they just want the tokens, for instance, in their computer game or as a credit in some service, in some application that they use in their cell phone. What are some basic divisions or types of cryptocurrencies? Firstly, you can distinguish between a coin and a token. Both are cryptocurrencies. The difference is that a coin has its own blockchain. Like Bitcoin has its own blockchain. Ethereum has its own blockchain. They have separate blockchains. They don't use the same database. While tokens, they use other coins' blockchain. Like there are a lot of tokens, so-called ERC20 tokens, that's a standard, built on Ethereum. So there are a lot of coins that use the same database as Ethereum, and they're called token. It has advantages, disadvantages. The advantage is that you don't need to find your own full nodes, your own miners. You have the decentralization, the security provided by the umbrella coin, by the, let's say, mother coin. While the disadvantage is that you need to comply with the basic protocol of the coin, of the umbrella coin, and also if there is a problem with the umbrella coin or the blockchain, you will be affected by it very probably. So that's why some coins start as tokens on Ethereum, but then they move to their own blockchain, to their own mainnet, and they become coins. Yeah, that happens often to successful projects that are able to survive the pilot phase. Um, for instance, Activity Points token is a token based on the Waves blockchain. There's a difference between mined and pre-mined coins, or not mined. A typical mined coin is Bitcoin. What does it mean that it is mined? It means that in the beginning, in the Genesis block where the project starts, there are 0 coins, and the miners create them by signing transactions and verifying the blocks, adding the blocks to the blockchain. So the money supply increases. While in pre-mined, there is some money supply already in the beginning. Maybe it is fixed that no new coins are mined. And then the pre-distribution is very important. If you imagine that 60% of the coins are owned by the developers, it means that it is not really decentralized, because they can always dump the price, yes, and they decide who will get paid. So their partners, their early investors, I don't know, some journalists or pilot project managers, they get paid with the coins. So the distribution might be unfair. On the other hand, in Bitcoin, also the distribution is very uneven. The early adopters own like 90%, 99% of all the Bitcoin. So the distribution, in fact, is very similar to the distribution of US dollars, for the sake of the matter. What I find personally, or what we find personally most important in our company, is specialization. Does the coin specialize for a certain function? Is it well suited for perform this one function? Why do we believe in specialization? This is a quotation or a quote by Michel de Montaigne. This is the guy who invented essay. I mean, like the literature format essay. No one serves him who addresses his voyage to no certain point. You need to know who your target group is, who your target users are. Will they demand a coin? You don't try to produce a coin which is good to everything. Not even Bitcoin is good to everything. It's a good store of value, but it's not a perfectly shaped to be a medium of exchange, for instance. Yeah, there is something called Gresham's law, which says literally that you cannot have a coin or a currency that is a good store of value and a good medium of exchange at the same time, because when it is a good store of value, people want to keep it and not spend it. Yes. Aleph dilemma. This is a story that I like to explain because, or like to tell, because it explains that different people have different motivations, different objectives, why they use money. So imagine a situation in which I have $1,000 and you decide what I do with the money. Either I spend it, I buy something with it, or I burn it. What would you recommend me to do? Should I spend my money or should I burn my money, and why? Anyone? Can you hear me? The question is, if you should decide what I should do with my money, I have $1,000, but it's up to your decision whether I should burn the money, destroy it, or whether I should buy something with it, send it back to circulation, spend it. What would you have me do? Yes, yes. Uh, Good point. When I burn it, then your money that you already own will be worth more because I increase the scarcity. The money supply goes down, and that makes your savings worth more. But what if you don't have money? What if you are not a saver? What if you don't have any money? It would not help you. But maybe you are economically active. You work, or you are a business person, you sell something. So when I buy something with the money, maybe I will buy something from you, or I will employ you, or the person to whom I pay the money will. That's how the money circuit works, right? If you inject more money into the economy, the GDP grows, and everyone gets richer in the end of the day. Maybe, yeah. So there are different opinions of different people. People who want to take rent because they already are rich, or they have some savings because they are very cautious and they don't spend money for stupid things. They would want me to burn it. Other people, the economically active people, would want me to spend it. Yeah. So clearly there are different opinions. Last argument for specialization is Timbergen's rule. Jan Timbergen was the first Nobel Prize winner for economics, so-called Nobel Prize winner, a Dutch economist, who said that for every monetary target, we should have a separate monetary instrument because functions of money are contradictory somehow. And you need to know what you want to do in order to shape your instrument, to adjust it to that one goal, rather than trying to shoot at 15 or dozen of goose at the same time with just one rifle. Yeah, you will probably scare all of them and not hit any of them. So this is our portfolio strategy, which coins, and it is based on specialization. So we have divided particular coins into groups, um, and they are in the groups because they specialize for pretty much the same thing. So still, there is a Bitcoin in the middle. Bitcoin is the best cryptocurrency. It is the most used one with the biggest um, number of users. It's by far most popular, very robust, good store of value. So it's in the middle of the flower. But then there are leaves, and our second most used group of cryptocurrencies, or group into which we invest most of money, is those who already have real usage. And then coins will have strong partnerships. They have partnerships with big companies, and the chances that the coin will be used and there will be demand for it because it is useful um, grows, increases. There is also a group of anonymous coins, for instance. There are some tokens that give you passive income, some coins that are used as medium of exchange, and also we use a strategy called rebalancing. So we set up these percentages. This is the share, the percentage at which we want to keep the particular coin. And we only move these percentages when there is a fundamental change. So when there is good news about the currency, like a new version was published, or they moved from Ethereum token to their own mainnet, or they signed a strong good partnership with the company, or they have a new wallet, any good fundament, we might increase the percentage, and vice versa. When people are not so much interested in the coin anymore, or they are not very fast in developing new things, or they are behind the roadmap, behind the milestones, we might decrease the percentage. So that's how we work. And then we use rebalancing for trading. We try to use the volatility, which means that a robot that I program tells me, well, you should only have 1.5% in this coin, but now this is exceeded by 20%, and now you have there 1.8. Yeah, 1.8%, which means that it is overbought. Yeah, it this coin had a good period of time. A lot of people bought it, so now it is time to pull off the earnings, the profit, and sell it. And with the money, you buy something that is oversold. Yeah, some coins that people forgot about, even though it is good. So now it is time to buy it and earn some money. So this is rebalancing. Rebalancing is a statistically very successful strategy. It gives you like 2-3% over the market just by doing this. And it's good to have a very strict rules how to use it in order to avoid your emotions. If you are trading, you are very subject to emotions, and with this huge volatility that occurs on cryptocurrency markets, you will tend to make a lot of mistakes just because your nerves. Yeah, it's very difficult for your nerves. So it's better to use algorithms, strategies, and keep it. In the long run, it's always better. Also, we have at least 10% in fiat currencies for liquidity when we want to withdraw money because some of the clients need the money or something, or we use it for hedging. Yeah, it's also a strategy that Warren Buffett uses, by the way, to have at least 10% of the portfolio in fiat. What indicators do we follow? What do we try to discover while doing the fundamental analysis? First thing, obviously, does it specialize for a certain function of money? Do they know what they want to do? And do they have a competitor in that? For instance, there are anonymous cryptocurrencies that are way more anonymous than, let's say, Bitcoin. Yes, so there would be Zcash, there would be Monero, there would be Dash, and many others. Mimblewimble now is a new protocol for anonymity. So there are competitors, and the approach might be, well, choose the best one or the two best ones, or just believe anonymity is the only thing that people will be interested in. So you just invest into all anonymous coins. It's up to you. There are different strategies. We usually choose one, maximum two coins doing the same thing. Yeah. Does it come with a new technology? That is important. When I said that investing into cryptocurrency is like investing into a startup or a new technology, well, there should be a new technology. Not necessarily. Sometimes you just use an existing technology, but you need to apply it in a new context. You need to find a market niche. If you have not found a market niche, then, well, your startup is meaningless. Why would anyone use it? Why would anyone invest in it when you are not addressing a market niche, when you are not solving a problem? Developers team. What are their experiences? Are there skilled programmers, experts on cryptography or banking, finance, anything? Do they have experience from different cryptocurrency projects? Or have they only learned about cryptocurrency like 5 months ago and before they were, I don't know, selling cars? Well, if their project targets at the car industry, maybe it's a good thing, but if not, well, then it is not a good it's not a very good qualification. Also, you need to check whether the people are real, whether it's not fake identities like this Mike Fike or with the Giza Ponzi scheme project. Community and communication. The size of the community is critical. There is something called Metcalfe's law in economics, and it says that a value of a project in terms of cryptocurrency, we would say market capitalization, is correlated with the square of users. So the more users, with the number of users, the value of the project or the capitalization grows exponentially. Exponentially. So it is important that there is a devoted community supporting the project. And the communication between the developers and the users is also critical. When they fail to communicate, it's a very bad sign. Tradability. Can we trade, buy the coins, the tokens at a sophisticated, secure, popular exchange like Binance or Bittrex, some trustworthy exchange, or only on some small obscure exchange that you've never heard of and which is located in South Korea, for instance? Well, it makes a difference. Also, implementation into the hardware wallet is important. Hardware wallet is the most secure and maybe the only secure way how to keep your cryptocurrency. So if it is not implemented, if it is not compatible with the cryptocurrency wallet, it is risky. I'm not saying it's a no-go, but it's risky. This is also an advantage of tokens because all the Ethereum-based tokens are compatible with Ethereum. They are also compatible with Trezor and Ledger hardware wallets, just because. And very importantly, is there a real usage? If there is, well, that's the unicorn among cryptocurrencies. Are there important partnerships? Very important. What sources do we use while performing the fundamental analysis? I would start on the web, on the official web of the project. Most of the projects have official webs. Why? Because you learn about their mission. You learn about what the developers of the project or the team of the project, what they believe about themselves, how they want to present themselves. Who they think their target group is, and what is the mission? What problem do they want to solve? Also, this is also quite a good portal. The official web would lead you to the other channels or the other sources of information. You can download a white paper usually from there. What is a white paper? A white paper is a business plan. It's a document which can be quite short, like Bitcoin's white paper only had 8 pages. That one written by Satoshi Nakamoto, published in 2008, 8 pages. It's called Bitcoin Digital Cash or something like that. While other white papers might have 100 pages and with a lot of technical details and stuff. So if the project is complicated and it's not very similar to Bitcoin, it's not a copycat of Bitcoin, but they bring a completely new technology, a new approach to distributed ledger technology. It doesn't have to be blockchain at all. It doesn't have to be a linear sequence of blocks like Bitcoin, but maybe something completely different. Then you need a more technical white paper to educate people about what you are trying to do and to persuade them that it makes sense, that it's not some kind of bullshit that you just come up with. GitHub. GitHub is a distributed open repository of code. So when people from all around the world, there are usually international mixed teams participating on the creation of a cryptocurrency. So when they work together, they might upload, and they usually do upload commits on GitHub with new code that they added to the protocol or to the wallets or to the infrastructure that they are building on. And it is good to follow the GitHub and to learn how many developers do they have, how quickly do they work, how many commits do they publish, like every week or every month. Is there an intense labor on the project, or are they just promising something that they will never be able to deliver because they are lazy as they are lazy? Official blog. Official blog is important because you learn about the communication. I said one of the crucial parts is communication of the team with the public, and you learn a lot from the official blog. Plus, there might be some interesting information. So some of the pieces of some of the information will only be published on an official blog. Twitter is the most important social network in cryptocurrency business. It's quite difficult to fake a Twitter account, and it works in a real time. It's really fast. So it's by far the most popular social network. And if you want quick information, definitely use Twitter. There are other channels, other social networks like Reddit, Facebook, not that popular, also used not that popular. Telegram, quite popular. You can discuss with the community on Telegram, and sometimes developers join, sometimes they don't really, sometimes they just pin messages time to time. But yeah, Telegram is a very popular messenger among cryptocurrency people, so it's also used. LinkedIn, obviously, if you want to check the CV, the history of the people in the team. Media, important for the sentimental analysis and the general, let's say, feeling, opinion of the people about the project. And there are also YouTuber channels, YouTube channel with YouTubers that bring you podcasts or news about cryptocurrencies. This is this is very good because sometimes it is funny, but mostly because you are just not able to follow everything, and they will filter information for you. So if you are interested in, let's say, 15, 25 projects, uh, you choose a couple of YouTubers who are interested in similar projects, uh, or you have top three projects that you follow. So you have two YouTubers on each of them, and they will filter the information for you. They will teach you um, what other information you should check on your own. Of course, you should always check it. Zoltan, what do you mean by media? Could you give an example? What I mean by media, there are web pages like Cointelegraph or CryptoCoin News that are focused on cryptocurrencies, and they give information about it. A lot of people read it. That's first type of media. The other type of media would be like television or I don't know, New York Times. These media read by general public, by a lot of people. They mention cryptocurrencies also quite often, and they uh, build this, or they create a general feeling of the industry uh, among the general public, among people that are not experts, that are not investors themselves. They have zero experience with crypto, and they only learn about crypto from this media. So when the media always just write about, oh, Bitcoin is dead already, they wrote about it like 600 times, or there was another scam or another hack or somebody was robbed, then it harms the sentiment of the general public. Yeah, and they are somehow interconnected with the investors that are concerned with crypto. Does it answer your question? Good, perfect. Thank you. Ask questions anytime. Do you want to ask any questions now about fundamental analysis? Because we are moving to examples of currencies. Um, there are symbols of 10 cryptocurrencies in the picture. Do you know any of them? You should know at least one of them.
IOTA, Litecoin, Binance Coin, Ethereum, Steam, Bitcoin, Chainlink.
Uh-huh.
The other three, I don't know.
Yeah, perfect. Ethereum was wrong. Anyone else?
Is that Ethereum Classic?
Yeah, Ethereum Classic, yes. Oliver also wrote it. And there are three more, the one with the two suns, then the one in the middle, and the one in the left lower corner. Does anyone have an idea? Probably not. Don't Google it. We will start with IOTA. I have prepared more detailed analysis of this project of IOTA because it is a project which looks really good, but in fact it is not. So it's not super easy to discover that it's not really prepared. So uh, just follow it with me. Okay, it's the 25th strongest cryptocurrency at CoinMarketCap. Mm, and it is a cryptocurrency for IoT. It's pre-mined. There is no mining of IOTA. It's a fixed supply. Um, it's for machine-to-machine economy. Unlike with most other cryptocurrencies, you don't pay any fees for making transactions. So if you imagine two machines or two robots communicate with each other, they want to exchange some information and put it into the blockchain. It would be very costly if they should pay for every message or transaction that they exchange. So IOTA offers a new approach how you can keep the project going, how you can motivate people to verify transactions without having to redistribute any type of fees or without mining, because there is no mining. Um, Instead of a blockchain, which is a linear chain of blocks that point at each other or at the previous blocks, and this way they keep the record safe from any attackers who would like to um, who would like to tamper with it or to change the history of the blockchain. In IOTA, you don't have this. You have a stream of transactions, a so-called directed acyclic graph. It's not IOTA's original idea. It's been used in other cryptocurrencies like Byteball or Nano. But the most famous directed acyclic graph is the so-called Tangle of IOTA. Um, in this tangle, everyone who wants his or her transaction to be put into the tangle first needs to verify two previous transactions. So while sending a transaction, my computer spends a second of its time and it just verifies the previous transaction. So there is no specific class of miners who would do that for everyone. There is no special business like this, but every participant does that, which means that this should be very well scalable. Problem over most of the cryptocurrencies or DLTs is lack of scalability. So it works quite well in small numbers, but when the traffic is too intense and there are too many users, too many transactions, the blockchain starts to bloat and it becomes increasingly expensive and sometimes even stuck. So in the beginning of 2018, the Bitcoin's blockchain, the whole network was overloaded, and you waited for a verification for, well, it happened to me. I waited 2 weeks, a fortnight for verification of a transaction. And you know how much money I paid for the transaction on fees? $20. $20 for a single transaction. That was the fee that I offered to the miners. And still I had to wait 14 days before the transaction was put into the blockchain. So it was incredibly overloaded because Bitcoin's blockchain was not that scalable. Also, there was a game on Ethereum called CryptoKitties. Maybe you've heard about it. In this game, people just breeded or crossbreeded digital kitties, trying to produce a very cute and interesting one. And people played this game, and the Ethereum crashed because it was not prepared for such um, such an interest in the project. It's similar to DDoS attack. The DDoS attack is denial of service, which means that many people are Googling one web page, and it is not able to sustain um, such a traffic. So IOTA should work differently. It should work better in the large scale. So the more users it has, the more effective it should be. Um, so this is how the tangle looks. Yes, it's a stream of transactions, and there are interwoven, interconnected, and you are somehow randomly um, uh, choosing, or the protocol randomly chooses which transactions you are about to verify. Monte Carlo random walk algorithm is used for that. The main use case is the communication between the machines. So IOTA means something very small, but also it refers to IoT, Internet of Things. So it could be used in shared economy, in chips and appliances, like your fridge, in shared bikes and stuff. Uh, Other use cases outside of IoT would be mainly data exchange, like for e-voting, e-governance, I don't know, digital identity, mask messaging. This is the interesting. It's a module built above IOTA basic layer. So it's sending encrypted data through the tangle, which can be shared with other parties. So it's like tuning a radio. If you want the other party to decrypt it, you would tell them their frequency, let's say. And they tune it and understand the stream of messages that you're sending. These are some ideas. Now take a look at the team. The headquarters are in Berlin, which is not a suspicious location. It's a good location, very close to Prague, and some popular good, let's say, cryptocurrency projects are located in Berlin, so it's completely fine. They have 83 developers, which is quite a lot. For instance, Sergey Ivancheglo has a really good reputation. He was the main developer of NXT. Back in 2014, NXT was the second biggest cryptocurrency, second only to Bitcoin. It was the first cryptocurrency to use proof of stake, so to avoid proof of work completely. There is also a Czech guy named Czech in the board or in the main team of IOTA. So I would say yes, they have a strong team. Speaking of cooperation, well, there were some, let's say, gossips that they have cooperation with Microsoft. Not really. Bosch should be their partner. So they are working on the partnerships, on the cooperation, and it seems quite reasonable. Um, Concerning social networks, they have a large number of followers at Twitter, more than 100,000. Not that many participants in Telegram or Facebook, and these numbers are even stagnating or going down. Since I first analyzed IOTA, these numbers went down, surprisingly enough. From the Google analysis, IOTA is rather being searched by man at work, more technically and aimed searching practically. If you compare it um, to, for instance, Cardano, which is also another project of a cryptocurrency platform, which should be somehow sophisticated. Cardano is rather Googled by Europeans and by investors. EOS, another project, is more popular in Asia, the United States, a little bit in Germany. Tradability. Here you can see at which exchanges IOTA can be traded. More than 30% of the volume is happens on OKX, which is weird. It's very uneven. So IOTA is kind of interconnected, I would say, to OKX. Maybe that's not a good word. Dependent somehow. Well, definitely, if somebody manipulates the price on OKX, it would affect the whole market. So it's not really a red flag, but it's weird. Um, 2 years ago, it was the same, but with Bitfinex. That IOTA was only traded on Bitfinex, which is a not super cool exchange because it is too much interconnected with Tether, which is another risky project, a stable coin, supposedly with dollar collateral, but that is not really. Um, I'm not really pursued that they have the collateral because they are not really able to prove it. The second most traded pair is IOTA with USDT. That's the Tether. Yeah, exactly the problem. Interconnection with Tether. Binance. Binance is a good exchange, and also uh, at the moment, this is from today, by the way. This is today. At the moment, people are afraid that the coronavirus will come to the United States. Well, it already is in the United States, but during the weekend they added a lot of restrictions, and the government finally reacted, and now the markets will open. And if the same happens like in Europe 14 days ago, the prices on stock on S&P and cryptocurrency will fall dramatically. So maybe people are just hedging. Um, so they are withdrawing money from IOTA and other cryptocurrencies, and they're moving it to Tether because it is the most uh, famous or popular stable coin. Yeah, with almost zero volatility, and the price is fixed to dollar, more or less. So maybe this is not a bad sign. Maybe this is not a red flag that the strongest trading pairs are with US dollar. It's just the zeitgeist. It's just what's happening today or nowadays when there's a lot of uncertainty in the markets because of the virus. Yeah, as Dmitry writes here, yeah, tradability changes every day. Zoltan asked whether they will get the slides from the presentation too. Yeah, definitely. Both courses, both cryptocurrency and Bitcoin in business, you will get the same slides. And if the record works, I hope it does. You will also get the video of it. Sure. Thank you for the questions. Anything else you want to ask? Good question. Why should investors, traders hedge crypto to US dollar to the Tether instead of fiat US dollar directly? It is because you can faster jump on back to the train. So you can keep the money at the Binance exchange, for instance, or the OKX exchange. You are quite safe. You hedged yourself against the volatility, against you're shorting. Basically, you're shorting the asset, IOTA in this case, but you don't really need to withdraw the money into fiat. Also, maybe you don't have so much liquidity. The exchanges between crypto and fiat are or give you limited liquidity without providing too many information about yourself. So it is always quite inconvenient, and then you need to get the money from the crypto to fiat exchange to your bank account, and that all takes time. It is costly, so it's more well, it's just easier and way cheaper to hedge yourself using stable coin. I would not recommend US dollar Tether, USDT. I would recommend, for instance, True US dollar or BUSD, which is the Binance stable coin, whatever. But I also understand that people choose Tether because it might have more liquidity, and thanks to to greater liquidity, the spreads are smaller, so it is cheaper to move in and back from Tether. Yeah, as Luboš says, some exchanges only trade crypto to crypto, so it's not that easy to withdraw money in fiat directly. And even if you could withdraw money to fiat, usually you cannot do that with every cryptocurrency. So you would first need to exchange, I don't know, IOTA for Bitcoin and then withdraw Bitcoin, which takes time, it is inconvenient, and of course you pay the fees more times, or you pay the spread more times. Where can I find this tradability data? This is information from CoinMarketCap. So if you open CoinMarketCap, you click on a particular coin, markets and sort by adjusted volume, which is from Messari. Messari is a service that avoids fake reported volumes manipulation. They only give their real trading volumes, and then you will see this table. Yeah, perfect. Thank you, Dmitry. Why did I say that IOTA is not yet ready? So far, it looks like a good project. The client was a real problem in 2017. They didn't have a good wallet. They didn't have a safe wallet. It was a problem. Security measures were outside of the client, outside of the wallet. They only had this online client, not even called the wallet, graphical user interface or something. And you needed to have a seed, a string of symbols that you use as a login. This is unsecured. Seed is something that you should only write in the beginning and then hide it somewhere. It's not something that you should carry with you all the time and use it to log into a wallet. So it's not recommended, but this is the way, this is what they recommended to do. And it was a very weak point. So they offered a link to a key generator on their official site, but if you used it, the page didn't work. So it just didn't work. So if you wanted to take IOTA back to your own wallet, not to keep it on Bitfinex, you would keep Googling how to generate the key. And this was a problem because it would lead you to a fake site of some scammers, hackers, that would let you generate your key, but they would know it too. They would also know your seed, and then they just waited before in the wallet more money appeared, and then they stole it. Yes. So the level of security was utterly low. Many of the wallets have been robbed. And also, in order to for the Tangle to look that there is some traffic, there will automatically money being sent from one address to another in your own wallet. So in the wallet, you would have like 50 or 100 addresses, and you never know at which address your IOTA tokens are, which is crazy because you need to manually generate the addresses more than like 50 times. You spend like 20 minutes just clicking like an idiot before some of your money appears, and you don't know what to think about it. You already feel like you've been robbed, even though you were not robbed. And then you receive an information that the IOTA team takes inactive accounts into custody. So if you are not moving the coins, they would just freeze your account and they would take control over it. That is incredible. It means that it is not secure at all. It is not decentralized at all. There is a manager, a team of IOTA that can steal your coins when they decide to. Like, really? Then there was a complicated reclaim. So if they took it into custody, which by the way happened to me too, need to understand this reclaim procedure, which has 6 pages. There was no official site, but member of the community from the IOTA team explained it on 6 pages, more than 3,000 symbols. You know, just to learn how to get your coins back from the custody of the team of IOTA. It is not decentralized. Even mathematically, it would take thousands of nodes if it should be decentralized. And almost no cryptocurrency has that many nodes. So in the meantime, which already means years already, transactions have been verified and executed by the centralized system of robots run by the IOTA Foundation, the so-called coordinators. So no, it is absolutely, completely, totally fake. There is no decentralization about it. You can theoretically install a full node, but everyone would have to run a full node to avoid the coordinators. Even in this year, IOTA was shut down because it was hacked by a group of hackers, and it, you know, for months the IOTA blockchain like disappeared and didn't work. You know? So this is like a prospect for a housing estate, which looks very nice, and if you're buying an apartment there, it looks super cool, but in fact the building looks like this ruin. Yeah, so this is IOTA when you look under the surface, unfortunately. So summary: is it specialized for a particular function of money? Yes. Does it come with a new technology? Yes. Good developers? Yes. Community and communication? Yes. Tradability? Yes. Implemented into hardware wallet? Yes. Finally, it is implemented into ledger, which should be secure, but when the whole blockchain or the tangle is down, well, still it's worthless completely. Real use cases? No, not really. And the token, I have not yet spoken about it, but the token has no meaning. In Ethereum, the token almost doesn't have a meaning, but at least you use it to pay fees for using the network. But here it is for free. So the token, there is no point for having it. And they expect that maybe in the future, I spoke with the Czech developer about it, maybe in the future, the token generates something called mana. Doesn't really matter, something like gas in Ethereum. And if you have more of it, then you can somehow, maybe in the future, we are not sure yet, use bigger proportion of the network. What it even means, well, unsure. Maybe they are planning to share some capacity. So with more mana, probably you would be able to use more capacity. But it is yet to be built. Yeah, it is something like a Lightning network. So they expect that there will evolve some kind of ecosystem, some kind of economy over this mana and the tokens, but it's not really the task of the developers. So at the moment, the token is good for nothing. Yeah, like with the Lightning networks, there might be a market with the Lightning nodes or something like that, but it's the way of the future. Nobody really knows whether there is anything about it. So definitely I would not buy IOTA, and definitely not at the moment, and maybe never. Even though I trust the people, I don't think that they are scammers. They're definitely not, but there are a lot of issues with the check. Now, very quickly, 10 other coins. Bitcoin, first at CoinMarketCap. Mindcoin is the oldest cryptocurrency. By far, it's the most popular one, most robust. It has a lot of full nodes, more than 10,000 full nodes. Full nodes are those who keep the full copy of the blockchain. A lot of miners, even though they are only gathered in like 10 biggest mining pools, but yeah, whatever. It only has a limited number of predefined smart contracts, so it's not as versatile, let's say, or universal like some other cryptocurrencies, but it does very well what it should do, which is storing the value. Because it is the oldest coin and with the biggest market, it doesn't have such a huge volatility as other coins, which might sound paradoxical because the volatility of Bitcoin is enormous, but still it is smaller than most of the other cryptocurrencies that are younger. Other cryptocurrency prices are correlated with it. It's a very, very greatly designed store of value, and probably it will be, and it will be used as a reserve currency even by central banks in the future if it is not used like it now. The scaling is very problematic, as I said. It should be, and maybe it already is, at some extent at least, solved by the upper layer. It's not the basic layer, but it is a layer built above the basic protocol, which is called Lightning Network. Litecoin, you probably heard about. Litecoin is the seventh biggest cryptocurrency, also mined. It's called the silver to Bitcoin's gold, and it's a fork of Bitcoin. So Charles Lee just created a younger brother of Bitcoin by adjusting a couple of parameters in the protocol. No big changes. And I thought a couple of years ago, I thought, well, Litecoin doesn't have a meaning. Yeah, it's just the same thing like Bitcoin, but Bitcoin is more popular. So there is no specialization. And I misunderstood one thing. The fact that Litecoin is smaller than Bitcoin makes it more flexible. While Bitcoin was very conservative in 2016 already, and it was very difficult to push forward any changes, any Bitcoin improvement protocols, for instance, SegWit, which increases the scalability and enables Lightning Network. It wouldn't be able, Lightning Network wouldn't be possible without SegWit. So Litecoin was able was used as a test net, as a sandbox. So there wasn't as much at stake at Litecoin, so they started to SegWit. And also because it has compatible source code, every when Bitcoin is implemented in hardware wallet, Litecoin is also, because just minor changes are required to do it. Also, Litecoin is compatible with all the terminals, the payment terminals, with the ATMs for Bitcoin. So these are advantages. And in January, I invested more into Litecoin, and everybody did. The price surged quite a lot because it stepped out of the shadow of Bitcoin, and now it has its own strategy. And it started cooperating with Grin, for instance, developers of Grin, on the Mimblewimble protocol, which is a new ambitious project providing anonymity and some new functionality. And now Litecoin is one of the main, let's say, developing communities for this, and it will be interconnected. So there will be more things that you can do with Litecoin if it works. So this is definitely a good fundamental and a good signal. Ethereum Classic. Maybe we will end 5 minutes later, but I will try to be quick. Don't worry. Number 20 at CoinMarketCap, a mined one. It's a fork of second biggest cryptocurrency, Ethereum. I think Luboš told me that you discussed Ethereum Classic and the problem with DAO hack in 2016, summer 2016, when there was a rollback in history of Ethereum, and some part of the community disagreed with it. So Ethereum Classic was created as a new coin, and it shared a history with Ethereum, the big one, up to the day when then they departed or forked because they have different philosophy. And since then, Ethereum Classic tried to sell the higher ground, the philosophical and moral higher ground. That was their flagship, and it was not very successful. This story did not really appeal to people very much. So there are not many developers or projects being built on Ethereum Classic, and at the moment, since like half a year ago, they're trying to catch up with Ethereum new versions in order to be compatible. So they are like crawling back to Ethereum. So I don't, even though I analyzed, or my team analyzed Ethereum Classic 3 times already, I would not recommend investing into it. it is popular among a lot of people, and I honestly don't really know why, because I don't think that there are fundamentals. Binance Coin, number 9 has coin market cap. This has a clear fundament and clear real usage, because it just makes cheaper trading on the biggest exchange. So clearly there is a non-speculative demand for it. If you use Binance Coin as an intermediary coin for trading, it is cheaper than when you use Bitcoin. And a lot of people trade on Binance, so this is a clear call. Steam, number 27, proof of stake. It is connected to a decentralized blogging platform, Steemit, which is similar to Reddit, and you are rewarded for upvotes, for likes, for shares on this Steemit with this coin. And they have a complicated system of 3 tokens, like Steam Power or something, which is not really super clear. Definitely not for beginners. And but yeah, I still kept investing into Steam because the platform has some meaning, and yeah, it is somehow relevant. But recently it was bought by Tron, also Tor, not Tor, BitTorrent BitTorrent was bought by Tron as well. So what happened is centralization. So the buyer, the Tron, like used brute force the stake that they got to outvote the community and to to force them to let's say to follow their improvement proposals. So it lost the centralization, and this also revealed a danger of proof of stake, that if you have a big stake, you can just outvote the rest of the community. And surprisingly enough, the price of Steam kept increasing, um, which doesn't make sense. And it means that somebody, probably at Tron, is buying the Steam, manipulating the price up, because this is clearly a bad fundament, not a good one. So in the long run, I believe I made a good choice by selling it. Holo, interesting project. It has completely different approach. Unlike all other DLTs, it uses double entry proofing. So when you create, everyone can create new units. There are no miners or something, or there is no protocol that would say how fast coins would be created. Everyone can create it, just like everyone can create fiat. Yes, but at the same time, that is created a liability. So it's a mix of approaches, and it is something quite fresh. There is no common ledger, but there is a common set of rules that must be accepted, and it is somehow embedded like a footprint to all the transactions. So the transaction is always checked by your counterparty, to the person to whom you send the transaction, checks history of your ledger and whether you follow the rules. So again, it is this double entry approach. It should be scalable, and it could be very well used, for instance, for decentralized carbon credits at consumer markets. Chainlink, great project, one of the best in the market, I believe, because it provides distributed oracles. Oracles are interfaces between a blockchain and the real world. Blockchain is trustless, but only when we speak about what happens inside of it. When we speak about communication between the real world and the blockchain, you need oracle, which is any interface. It can be a person just designated to insert information as they believe is correct into the blockchain. Now, we cannot speak about decentralization at all. There needs to be a distributed Oracle system, and Chainlink is providing it. It is compatible with Ethereum virtual machine. It can be used for insurance contracts and stuff. So if there is no Chainlink, the smart contracts are just dumb contracts. All the dApps, in fact, have some element of centralization, so there are no real distributed applications, and this can be the way how to change it. Aeon is a project that we analyze very deeply. Like we wrote a more than 30 pages long report on it, and we learned that this is something very unique and very interesting, something new. There are projects that try to become cryptocurrency projects that try to become a new Facebook, new Uber. They want to replace Airbnb, while Aeon started originally as an interoperability platform, like a bridging protocol between different blockchains. They try to help blockchains to communicate with each other, but then they found a market niche, and they communicate with these companies like the Uber and stuff, and offer them blockchain services. So imagine you are an Uber driver and you are building a reputation, but when Uber stops offering services in your city, you lost your reputation. You cannot use it anywhere else. And then if you want to, I don't know, rent your house, uh, then you need to build a new reputation on a new system like the Airbnb. And reputation clearly will be a currency of the 21st century, or one of the currencies. It is super important. And with Ion or similar services, you could withdraw the reputation from the one system and use it in another. And you don't need a centrally organized credit system like in China, the Sesame credit in China, which does the same, but it's controlled by the government. Here you have a decentralized solution for the gig economy, and they have strong partnerships. That is important in Miami, Florida, and in South America. Last thing, Mana, also not in the top 10, top 100 on CoinMarketCap. It's a currency of a virtual reality game called Decentraland, and you can use it for buying land, for buying property in this uh, virtual world, which might be very relevant today when people cannot meet face to face. You need a safe space for fun, for business, for education. And even if there was no coronavirus, you need something which is eco-friendly. So if you have relatives on the other continent, you don't need to fly there so often. You can spend a night's time together with the living room in the virtual world, which I think is a reality of the next months rather than years, probably. Yeah, and that's it, ladies and gentlemen.